Hey, and welcome to another video here at Fiscal Voyage. I'm Felix, and today we're gonna do a stock analysis on Vedanta. This was suggested by Jonas. Thank you, Jonas, for suggesting the company. So we're gonna do a stock analysis. If this is the first time visiting my channel, make sure to comment and let me know what company would you like for me to do next on a stock analysis video. So with that, let's do a stock analysis on Vedanta, a 5-minute stock analysis to determine if it's a buy, hold, or sell right now. All right, so here's the 5-minute stock analysis on Vedanta Limited. It can be found on the New York Stock Exchange as VEDL. The company is based in India and is a mining company, and its main operation in iron ore, gold, aluminum mines, and Goa, Karnataka, Rajasthan, and Odisha. Hard to say. It is 50% owned by Vedanta Resources, a UK-based company controlled by the Anna Agora family, and 50% owned by other entities including the public, mutual funds, and foreign investors. First off, the company ends its fiscal years on March, so fiscal year 2019 is already finished. So with that, from 2010 to 2019, revenue grew at a compound rate of 35%, which is outstanding. And they also report earnings in Indian rupee. Net income in that time period grew at 7.35%. Currently, there is no S&P credit rating, which is not something I like. Operating income came in at 17.13% growth during that same time period. However, earnings had a negative 5.51% growth or lack of growth in that period. That's something I don't like to see. I like to see positive earnings growth. That's how companies are able to pay out dividends. And the 5-year average is actually the worst at negative 9.02%. So earnings is dropping at a significant rate there. For 2019 fiscal, the company reported $1.07. Net margin came in at 5.48, which is expanded compared to 2018 of 1.50%. Return on equity is 8.46%. Debt to cap is pretty low at 26%. And current dividend, they have a 1.24% yield with a nice payout at 37.38%. However, the company has been very fluctuation with the dividends payout. They've had recent higher dividends. They actually decreased dividends by almost 80%. This is why they don't have any consecutive years of dividend growth. They do have a 5-year yield average of 7.38. So as you can see, now at 1.24%, they were paying out a higher dividend yield, but because of the cut, basically, the yield is much lower. Future outlook for 2020, their expected earnings of 0.81, which is less than the $1.07 for 2019. So earnings are on the downtrend, as you can see, but it's expected to pick up in 2021 at $1.18. Analysts expect 3-year projected growth of 7.8%. However, my dividend drill return model, future projected return, came in at 8.2%. I like companies coming in at 9 to 10% or higher return. So this is something I don't like here. Also, the earnings lack of growth as well as something I don't like of the company. Currently, they have a forward PE of 5.33. They have a current PE of 7.11. So this I like. The current PE is higher than the forward PE. Alright, so let's see the fast graph. You can see here the black lines represents the monthly closing price. The orange is the normal earnings of a multiple of 15, and the blue line is normal PE. Based on this, it looks like the company likes to follow the normal PE. So based on the 2020 earnings of 81 cents, it looks like the company is slightly overvalued. but let's determine that. Morningstar has a fair price of $10.02. Simply Wallet at 15. Fastgraph at 9.17. Yahoo doesn't have any fair price value, and my dividend discount model, which is $1.10. Averaging out the four, we get a price of $9.06. Currently, at today's price at $8.72, the company is undervalued by 3.9%. However, I recommend it as a hold because the fluctuation of the dividends, the cuts, it's been going, they'll pay out more or less. Free cash flow is negative for the past 5 years. And I think more than that as well. Free cash flow is how companies pay out their dividends. So that's very important. And this is a company based in India. It's not something that I would like to own personally. But with that, that's why I recommend it as a hold. I'd rather invest my money in other companies that has better growth prospects. So thank you for watching, and if you find this company that you would like me to do next, let me know in the comments. Let me know the name and the ticker symbol. And thank you for watching. If you find this video informative, please hit the like button and subscribe to my channel for more videos like this. And you can check out my portfolio there's a link in the description. So thanks again and have a great day.